All right, let's take a look at the stock market today. I'm watching the weekly chart here. Um, we're, some of you may know we're getting a panic in bonds. Let me put up the bond chart here. So you can see the bonds, the traders are panicking out of the bond market. Probably a combination of two things. The market is probably recognizing that we're starting to get a spike in inflation, and then the current administration is pushing through some really radical policies. So I think money is trying to get out of U.S. debt. So anyway, this panic here, this is kind of turning into at least a semi dislocation, has the potential to trigger um, uh, an ICL, an intermediate decline in the stock market. So let me go back to the S&P. So this is what I'm watching here. I want to see how we close this week. If tomorrow, if the S&P closes, near the highs of this, um, right now we've got a reversal candle off the 10-week moving average. If the S&P can close up near the highs tomorrow, then I would say um, we're still kind of locked in this runaway move that we've been in, and it may just continue. If, however, bonds traders continue to panic out of bonds, and the selling that's we're giving back some of today's or yesterday's gains today, but if this um, if we close tomorrow down near the lows, then this is going to look like a weekly swing that is preparing to drop below the 10-week moving average, and that's one of the parameters that more often than not registers during an intermediate cycle low. Um, let me stress, don't panic. We're very, very late in this um, intermediate cycle. I'm expecting a short daily cycle. Let me convert this over. So this, you can see, here's our first daily cycle, here's our second daily cycle. This second daily cycle is really long. So usually after a really long cycle, you get a short one. So even if this does turn out to be an intermediate decline during this third daily cycle, it's probably going to be over pretty quickly. We're already on day 18. I don't really expect this daily cycle to run much more than 25 to 28 days. So we might have 7 to 10 more days to go, assuming that that we do continue down. And there's a couple of parameters that are going to need to be hit for this to qualify as an ICL. We'll probably move below this daily cycle low right here. Maybe only marginally, though. The 38% retracement of this entire intermediate cycle, which is kind of my definition of a minimum retracement for a normal ICL, is at about, I believe it's at about 3660. Let me put that on there. So yeah, I did just check it, and it's at about 3665-ish, somewhere right around in this level here. So that would be scary if that happens, and it would happen pretty quickly over a 5 to 10 day period probably. We would come back down and eclipse this low. It's going to convince many of the bears that the bubble has popped and the market has topped, but it won't be. It'll just be our first volatility event that I've been warning people for weeks and weeks now that we're going to have at some point. Going to have that volatility event. And then once that's over, then the dip buyers are going to come back in again, and they're going to, we're going to recover very rapidly from the ICL. But again, I'm not suggesting that this is absolutely 100% going to happen. I need to see how we close the week. if we sell off into the close today, and then we closed somewhere down around the lows here, around 3,800 tomorrow afternoon, then I would say yes. We've probably got 1 or 2 more weeks into a final intermediate cycle low, and probably going to drop below this, and then that is going to be your buying opportunity, because then the next intermediate advance will probably be even more aggressive than this one was. So no need to panic. I just put out a report for my subscribers that if the S&P closes back below the 10-day moving average, which it's below right now, then maybe they want to add some hedges to their stock portfolio, just in case we are about to drop into an intermediate cycle low, and then you'd want to take those hedges off and then get aggressively long again, probably somewhere once we break below this daily cycle low, somewhere in the between 3,600 and 3,700, and then I think we would rocket launch out of that, and it would be up and away for another 15 to 20 months. That's about what this intermediate cycle has run. It's run about 20, not months, but weeks. It's run about 20 weeks into this potential intermediate top anyway.